Joe is somebody who I don't think enough people know who you are and what y'all do, but he's been involved a lot longer than what some people realize, building out a lot of power infrastructure, knows the freaking power side of things and the infrastructure side of things as well as anybody I've talked to. So, yeah, man, glad you're here, finally.
You come from a power background?
Yeah, I spent about the first 20 years of my career, about 10 or 11 of that, I was overseas building deep water offshore oil rigs and production platforms and wind farms and stuff. So big, heavy offshore construction. And then
it's really big in Kansas.
Yeah, well, it's basically as far away from Kansas as you can get, like on the South China Sea, running pirate blockades, right? But came back, and then I got my MBA and ran Honeywell's global smart grid business.
Okay.
And so that kind of led into, wow, we're incentivizing a ton of this renewable intermittent generation, and we're going to have a giant flexible load problem. And asking people to turn their thermostats down when it's hot outside is not the answer. Right. What are we going to? And it was basically an unsolvable problem until essentially Bitcoin mining came around. Like, you couldn't get the amount of flexible load at scale to manage at a grid level.
Unpack that problem a little bit more.
So we originally designed the power grid, and by we, I mean the U.S. government basically signed in a series of laws that said anyone can make a utility, and all these little towns across the country made their own utilities. But in general, what they did is if you had people here or a factory here, you built a power plant there. And then over time, you'd build lines connecting the cities. So if one power plant is down, you can send the power. Well, then what happened was, and that was thermal, right? Coal, gas, nuclear. And over time, we began incentivizing renewable development. Well, we didn't necessarily build all of our centers or our cities and our factories where the sun and the wind was the most optimal.
Right.
So now we've separated out, we've put all this distance between them, as we know, which is ultimately results in the congestion we talk about so much and all of these things. But the intermittency there was also never designed in the grid, right? Like, we essentially built that grid to deliver electrons in one direction, steady state around the clock, right? And now we're trying to kind of redesign the 80-year-old system on the fly with all the renewables. And the problem is, you could manage that. The grid was really like a top-down kind of almost command structure where power plants could coordinate. They could say, if you're turning down, I'll turn up, or everybody turn up or turn down. You have controllable generation. Wind and solar show up when they show up, and you can turn them off, but that's not usually the problem. I mean, that's a problem for their economics, but it's not really a problem for the grid. It's the problem when the grid needs it and they're not there. And so now we have to balance that somehow. And so you're going to need that load on the grid side that is able to like turn on and off. And Bitcoin's the frontier species there. I think there's opportunity there with some of the AI stuff. We're still learning more about that. In theory, hydrogen is, although I'll admit I'm not a believer necessarily yet that that's real, but there's certainly a wall of money. A lot of people have been staring at it with batteries for so long. They think that batteries can be the part of the solution, and I think they are. But when you're talking about gigawatts of power that you need to move around, the capex cost of those batteries is like trillions and trillions of dollars.
That's what I was going to ask, is like, what for a battery type of setup to be scalable, what kind of cost would you look at when you compare it to like a Bitcoin mining facility that can take that much load with that small footprint too?
So, when we build infrastructure, depending on costs and the size or whatever, you're in the hundreds of thousands of dollars a megawatt. Batteries are hundreds of thousands of dollars a kilowatt.
Holy cow. Yeah. See, that's something people don't talk about a lot. Like, yeah, you can go get some battery stuff going, but the cost, I mean, we're far away from that being a scalable, like a Bitcoin level scalable.
At the edge, or for like load shifting, that kind of thing, there is value there, but you only get it for a couple hours, and it's only a little bit of a pop, Now, I think there is a future, certainly, where you're going to see blended facilities or them as part of a larger flexible load campus, because certainly they do some things very well, like frequency response and some of those really fast responses that help smooth out the power. But if it's like, Uri is coming, we need to, you can inject power for a little bit, but we need to structurally remove demand from the grid for a period of time. This is the thing. I mean, this is the thing that does it.
Did you see what's the HUD 8 lady? Jamie
Susan
Leverton?
and Jamie, I think.
Yeah.
Sue and Jamie.
Yeah, she tweeted something the other day about it was a nuclear facility group, like talking about, they didn't really come out until you got into the actual study they did, and there they talked about Bitcoin mining, but they were talking about Bitcoin mining as basically the base load and as a response tool for some of the nuclear power facilities. So it's like, when you get to that level and they're realizing how acceptable it is and how reliable it is, I think we talk about it all the time, but it's inevitable that this is going to bleed down to
that's
utility
where
level.
That's like the core part of our business, right? Is we go to probably 20 to 25 conferences a year, and 5 of them are Bitcoin conferences, and the rest are energy conferences.
Really? Yeah.
And the thing is, it fixes economics for renewables. It fixes economics for thermal. It fixes economics for everybody is gonna wants the ability to fix that shape,
right,
and that controllability, especially at the cost profiles. But it's still like a ton of education. The industry is very conservative because you don't want to run into what I call the Syria problem, which is if you lose power for 72 hours, you basically turn into Syria. Like if you have a sustained outage of the electrical grid over a large swath of area for a long time, for the context I always give is in Uri, ERCOT lost power for 8 minutes.
Right.
That was 8 minutes.
That's crazy.
So think about 72 hours, right?
Yeah.
All your food distribution's gone. All your gas stations are all reset.
Man,
like everything's broken.
This reminds me of a book. I think it's called Going Home. But it basically was like society falls apart completely after like a 5-day period.
Right.
It was just like,
it's a disaster.
Crazy.
So,
and he laid it out and was like, oh shit, I think this could actually happen.
And that's probably one of those things that's up there with like, Bitcoin is very important and a very interesting tool, and I think going to be a huge potential driver to move things forward. But it's right up there with like, let's not have civilization fall into little tiny pieces because we get so aggressive with, with some of this grid stuff. So you got to overcome that when you go talk to these power plants and the utilities, et cetera. And we've had a lot of success at that this year. That's where we just focus on multi-100 megawatt co-located custom designed power deals, and really we're focused on the infrastructure part where we think we want to be putting 500 megs to a gig of mining infrastructure in the ground a year. Right.
And we didn't even say your company's name, but Adakon Energy.
Adakon Energy Solutions is the name of the firm. I'm the principal. We've got a relatively small team, some great partners. We've had a great first year helping place a lot of power in a lot of sites, and are kind of doing some large scale development work now up in North Dakota. We've got a 400 megawatt PPA directly with the power plant behind the fence with them. And so what we do is we essentially tenant it out, right? Because there's one of the big things you want to think about, or we think about on this, is you immediately get a bunch of the mining community that comes out is like, that's like massive centralization danger. But I don't know if we're as fully aligned there, where you think if you're delaminating it a little bit and you've got, this is going to go like oil and gas, where you're going to have a couple integrated players and everything else is going to be delaminated, where you're going to have someone's going to own the asset, the oil, the dirt, the ASIC. Someone's going to own the infrastructure, the rig, the well, etc. Someone's going to be the oil field services company. Right. You're going to have different groups of financing that finance the different layers. Yep. And so we want to focus on the layer we're really good at, which we think is finding really attractive locations and then helping to finance and deploy world-class institutional infrastructure. Because there's the kind of the last couple 6 weeks with everything that's been going on in ETF space. Yeah. It's not a big leap of logic to think, okay, well, ETF's going to get approved. You have 7 of the largest asset and real estate owning entities in the world are now going to have Bitcoin ETFs. They're also 7 of the largest corporate power consumers in the world.
Yeah.
And as soon as they realize, hey,
I can put these together.
if I just take a position in infrastructure, or if I just take an ASIC position using infrastructure, and I'm getting Bitcoin at a 60%, 20% discount to spot, and I'm just converting them into ETF shares,
Why would they not
why
do
would
that?
you not build a million?
Right.
And so they're okay. Oh shit! Right?
Yeah.
Like that's good.
Yeah.
But this goes. I know the teams at Luxord and a couple others, to name a few, have been doing great work on the derivative side.
Mm-hmm.
But it all comes down to like, what is your institutional grade infrastructure? Because these guys like BlackRock, Fidelity, VanEck, they're not going to go buy a barn that's been repurposed in rural Ohio. But they will buy Homeland Security secured standard sites behind the fence at a power plant that's been operating for decades with very reliable. You just have a lot of world-class infrastructure, and you're gonna probably pay a small premium on the build there, but the customer quality you're gonna be able to attract to that over the long term is gonna be huge.
Right.
And so, kind of looping all the way back around is we kind of tenant these things out where you have different groups that are taking that capacity. And so while the infrastructure may be somewhat centralized, the actual operators that control the hash are different.
Right.
So you're not having a single organization being like, oh, everyone's going into one pool and one kind of animal.
Are you guys running the site operations for miners, or are you guys just focusing on getting the site to where it's like development ready? And then
so we've been working on, not yet. So we're working on offering a managed hosting offering, but even then I think that's outside of Adakon's scope. I think there's a couple companies out there that have done some great work on building their operations as a service. Certainly I think Foundry's done some good work. Greenwich has a great team. There's several groups out there.
Yeah. I think Compass is doing it now too.
Yeah. Compass and the guys over there are working on it. And so I think building all of those, I've ran operations businesses for a long time. Like, they're very hard.
Yeah.
And they're very different than kind of what we're doing.
Yeah.
And if you've got these guys that they have all the operations and procedures, fully trained staff, the ability to deploy quickly, we would rather partner with them closely,
right,
and help them be successful in building their businesses.
Did you hear that, Foundry?
So if I understand this correctly, you guys go like with this one project you have with the power plant, you secure the PPA. How far in the site development do you guys go? To where, it's literally ready to plug in some ASICs?
So in this case, this first campus is going to be interesting because it's going to be a blended mix. About 60-40 is going to be 60% containerized and 40% buildings.
Yeah.
We'll be building the buildings all the way to the rack. And then on the containerized side, I think we don't really want to take a lot of responsibility on those containers because the designs are all very different. There's good products out there. There's also bad products out there. There's also products that have been sitting out in the sun for 2 years with nobody managing them because of all the bankruptcies, et cetera. And so we'll essentially give you I call it a Bitcoin trailer park. We'll put down the pads with the plug. You bring in your containers and you can, energize from there.
Right.
I think that's a very interesting model. We talk to the utilities a lot about, right? Because they understand doing things like spending money on concrete and electrical equipment. They don't understand building data centers or running their own data centers.
And so your customers are mostly existing miners, or are you trying to go in and convert some of the power players into miners?
So interesting. This the power plant we've partnered with, they actually have like a 6 megawatt immersion facility on site that they built because they wanted to play around with it. And it's the nicest immersion facility I've ever seen.
Really?
It's
that's awesome. That's good to know.
Way over.
I'm telling you, man, utilities, once they start pouring
they see it. And
this
is like right up their zone, man. This is right in there. I think the conversion comes when they see the megawatt sales. I think there's varying degrees of conservatism around getting exposure to Bitcoin, but I think certainly they understand and are beginning to more deeply understand the benefits of the flexibility, the benefits of having that like co-located offtake. Utilities are a very interesting business model where their customer base is geographically limited. Like it's very rare. And I know I think Lubbock is switching from SPP to ERCOT. Right?
I saw that.
But that's like very at the margins, right?
Yeah.
Like if you're like a small town, that's your service area. And so if you want to build generation to serve that, you're captive now. You don't have a second customer.
Mm-hmm.
You know, even if you're in ERCOT, you have ERCOT, but you don't. That's your one customer. That clearing price is you can get other customers through the market mechanisms we have, but it's very interesting for some of these regulated guys in the Southeast and where they can. Oh well, we could sell we have an international product we can sell.
Yeah,
and so we can sell our megawatts internationally.
That's basically you're opening the market up for them.
That's right.
Yeah.
And it's an education journey, right? It's going to come in. I think the markets are going to get there faster, the deregulated areas. But certainly, I've had one of the 5 largest utilities in the country tell me as soon as we can get an 8% return, we'll invest.
Wow.
It's too risky now. Too much return.
Yeah. That's what's so wild, isn't it?
It's too volatile.
They want volatility down.
They want it very...
And they'll trade down volatility for down
But
profits.
It's all about... all these guys have different drivers.
Right.
And a lot of the space kind of gets dialed in on ERCOT, obviously, because it's a heavy hitter, and the market areas in general, and they kind of just think about, if I'm in one of these regulated utilities, I'm just a taker.
Right.
But there's all these other pieces there with economic development, various like the way demand response works is very different in regulated markets than in deregulated markets, but it's still there. And so we think there's a tremendous opportunity there over the next 5 years.
Yeah.
But it takes a little bit of time.
It does. I've actually been doing more like PJM stuff lately, and
there's some really interesting stuff.
You can get some really cheap power prices, like
it's in the right spot.
Yeah, in the right spots. And then even in Oklahoma, like depending on the service level that you're at, like you can get some pretty cheap rates, especially now they're doing an adjustment on their fuel charge.
It cracks me up how everybody like rushed in. Fuel charge adjustment, rushed out.
Right.
Charge adjustment,
yeah. And it's like, man, just like let's look over this, zoom out. You know what I mean? We say that in Bitcoin all the time. So zoom out and calm down and like, let's look at this. There's some opportunities that get overlooked sometimes. But because you do so much work with the utility level, like how are you seeing them handle collateral issues and like exposure to miners from buying this large amounts of power? Because obviously we had the bear market. Feels like things are coming out right now, and some people are getting all excited again, which I want to ask you about that too. But are you seeing them change how they're looking at collateral, or are they making any type of adjustments to try to work with miners to make it more reasonable? Because you are taking so many megawatts. Your collateral it's huge.
It's not a small number.
Right.
Yeah. And so I think there's a couple ways to attack this as an industry. And I think a lot of this is going to have to be the mining community is going to have to come up with better structures to reach across the aisle. And that's kind of part of the thesis by what we're trying to do at Adakon, where if I own the infrastructure and then the miner is separate, that reduces counterparty risk. Right. If I have 7 mining customers at one site instead of just one, that reduces counterparty risk. If you're able to pay quickly, and there's Sonota is a great example where they're doing some great work in the space, right? Where they're, if you're taking your AR from 30 days to 1, that's a big deal. That's a huge amount of that pot. And so it's not look, Ballard's devastatingly handsome. Let's give him a great deal on collateral. Like there's a little bit of a walk there.
If only it was that easy.
If only it was that exactly. Jake's like, it's not easy. But I think there's a journey there. But they are getting more sophisticated with that. But I think that also comes with a expectation where a lot of the desks they talk power, man. They talk power and megawatts, and you have to be using the same language that they're using in order to get the flexibility that you're.
Right.
And we help a lot of companies with that. We do a lot of consulting work around that. We help with structuring products with desks on how to build miner specific products. I call, at a high level, there's a lot of ways we call up utilities. It's funny. We call up a lot of utilities, but when, we've had conversations with towns, we're like, well, what's like your 92% price?
Yeah.
What's your price if I only take power 92% of the hours and you choose the hours?
Yeah.
I mean, a lot of these guys are still using Windows 3.5 on so there's varying levels of sophistication across the market. You've got to kind of think about how you're going to meet them in the middle. And jurisdictional friendliness matters. There's no point in banging your head against the wall in jurisdictions that are relatively hostile, but we have 2,000 utilities in the US, and ostensibly they all like to sell megawatts.
Yeah.
So, there's one for everybody.
Yeah.
I think you'll see it. It's going to take a little bit of time too for the market to mature, right? Like none of even the large public miners, no one has what would be like a battleship balance sheet, right? Where you're talking, these desks are posting billions of dollars a day to ERCOT.
Yeah.
Right. And so they're like, who are you?
Yeah. Yeah. I know that goes back to another thing I've talked about and we've talked about before is, sometimes in the mining space, we get caught up in our own little, like Bitcoin Twitter, Bitcoin X, whatever now. But the reality is, like, we're still very small players in the overall scheme of things. And
we had ERCOT grow from 67 megs to 86 megs in like 2 years.
And that's a big number.
That's a big number. And maybe 3 of that was miners.
Right.
So there was another 15, 5x more from the Teslas and the homeowners and everybody else's.
Right. So it's like we still are early. There's still a long ways to go. And what seems normal to us is not normal to like a guy, a regular dude at the utility or at an oil and gas company or some other power generation place. So like we have to find ways to keep educating them and working with them. But so you mentioned some of the bigger projects that you guys are, what's your kind of scale that you look for?
So we focus in kind of 2 sectors. So one is what I would call utility scale projects where you're looking at hundreds of megawatts and you're co-locating with a generation source or maybe like a very large substation or like nodal transmission, right? And so those are going to be large projects, probably have some level of greenfield work done with them. Take a little bit more time, depending. We try and short circuit that as much as possible, but you have a little bit more just lead time on getting that stuff done. And then we'll focus a lot on, I would call it like the 5 to 50 megawatt segment in front of the meter, where whether you're industrial redevelopment, so like carpet factories and old packing plants and wood, carpentry operations or wood processing plants, lumber plants, things where, and I think this is something we don't discuss enough that's really interesting is, if you have a small town and they have a small utility and they had one mill, right? And the mill's gone, right? That has been destroying small towns in the US for 25 years, 50 years probably. And if you go in and you can replace that, they don't have the population base to pull in like an auto parts manufacturer or a widget manufacturer where you need hundreds of jobs. They need like 50 jobs or 10 jobs, but they need to replace that power consumption. Now you can go in and replace it with a mine. And this is a collaborative thing, right? You are arm in arm with the city on this stuff. And, the eventual end game there is obviously instead of raising taxes in the town, you just build a bigger Bitcoin.
Yeah, right.
And now you just have equalized your tax rate forever for all your businesses. And now how
Rockdale's a good example of that with Riot.
They've done some great work there.
Yeah.
And so I think I don't think that model's perfected yet either.
Right, no,
I
not
think
at all.
I do worry a little bit about the large mega sites that sit in front of the meter.
Yeah, no,
because
I
can. You think that all of the power desks and congestion traders don't know all of the terms or generally of those PPAs, and they're not planning their trades around those expiries, their generation that they know. Like you just have a lot of adversarial risk. Yeah. Like Bitcoin is probably the purest free market out there. The oil market's relatively pure still, but power markets in Texas, man, like that is a wild west of a lot of actors.
Yeah.
And you run into some situations where you could be on the bad side of some trades there and you have trouble.
Yeah, you're in trouble. Right. And that is probably one of the bigger risks that is out there that isn't technically, I guess, Bitcoin related, but it is. It's like, man, that's something that can catch you, and you
got to have
the other
generator sitting in your pocket, right?
Right. Somebody's watching this stuff, and they're going to plan to make their money off of some of these opportunities that might pop up. But and it's funny that you said that about the the mills and all that kind of in small towns. I'm actually working on a deal right now that it's similar in a way. It's just underutilized power at a privately owned facility. Yeah. And you get cheap rates, you got the power's already there. It's like easy to go in and build. And it's another one of those things where you like, look, this was something that will probably create, 15 jobs, 20 jobs for this deal in a place where there's not very many jobs. And, that's a tribute to Bitcoin mining and kind of what it can do to revitalize communities. And
I think there's a ton of attack surface in PJM around existing industrial.
Yeah. I think those are some of the best opportunities up there.
Very interesting stuff you can do there to penetrate that market very, very broadly.
Yeah.
What's the most interesting?
What you can say, Joe, without giving away your Joe Million secrets.
So
wasn't Joe Millionaire a show? Was there a show, Joe Millionaire or something? That's this guy.
Yeah. I mean, honestly, there's such a lack of, there's so much, we're so early and there's so many more people we need in this space. I don't worry too much about keeping a ton of
big
stuff
secrets.
Super secret. But I think at a general level, what I would say is there is a lot of, if you look at how industrial rate plans are constructed, they pay on their peak power usage during the month. A lot of times that is when 2 or 3 days out of the month, they're running their biggest piece of kit. And the rest of the month, they're drawing much less power. So you have a shape now that needs to be filled. And there's a lot of work to be done still to figure out exactly how that works in all of the different ways. But there are definitely multiple very large companies that can be built deploying solves against that.
Yeah, I think you're right. And it's kind of decentralizes it a little bit too.
It does.
Yeah.
It does.
Yeah.
And there's, I would say, the second level of institutional grade infrastructure behind, at a power plant. Maybe it's something like, it's at a Coca-Cola bottling plant. Oh, well, that seems good.
Yeah. I there was a group when I first started Jay. I don't care if they. I don't think they'll mind me saying this, but Ally Energy Services, I think. I can't remember. Sorry, guys, I can't remember the exact name. But what they did was they went into warehouses, factories, and kind of evaluate their entire power structure, try to green it up some.
Yep.
And look for efficiencies to kind of maximize the use of their power that was available to them.
Yeah, I ran that business at Honeywell.
Oh, did you? Okay, so it's basically the same type of deal.
Yeah, we white labeled that service for 12 of the 25 largest utilities.
And so is that kind of how you looked at Bitcoin and was like, this would be great for this? Because that's what they did. They're like, this would be wonderful.
I kind of fell down the rabbit hole about probably 3 years ago now or so, 3-4 years ago. And I just started looking at it and I was like, oh, well, this fixes the thing.
Yeah.
This is the thing you need. This solves all of this stuff. Yeah. And so we're going to need, I think I've seen a study. I know I've quoted this before, but, there's studies out there ranging between 200 to 500 gigs of renewables on the grid by the end of the decade.
Wow.
Right?
Gosh.
Or flexible load need,
I
believe is what the studies are, is between all the renewables and all of the new load growth and everything else, we're going to need 200 to 500 gigs of flexible load.
Jeez.
By the best estimations, we are somewhere in the 50s to 70s.
Man.
So we need to 7x the amount of flexible load in existence in the next 7 years.
Man.
6 years. It's almost 2024.
Where's that capital going to come from?
Yeah,
it's a great question because we're not subsidizing it. So how do you have a model that is market profitable to generate flexible load.
Man, I don't know.
What kind of tools are out there?
Well,
Gents.
Yeah, I guess Bitcoin mining would be good, right?
But that's
Who's
where
gonna pay for it.
You know, we're going to need. But if you break that down into okay, we need 30 gigs of mining a year, or let's say mining takes 70% of it, right? So that's 20 gigs of mining a year. The entire Bitcoin network's like 14 gigs.
Yeah,
14 to 18 gigs.
There's not even enough machines to fill that load, is there?
Well, I mean, yeah,
they're not manufacturing that much.
We're gonna need more of everything, right?
Wow.
In order to do that, and that's just like to stop having serious situations.
Yeah.
Right.
Yeah.
I mean, like we're talking. That doesn't include any other use cases for mining, of which there are many, and there's a bunch of great startups out there working on it, on different things, whether it's heat capture or, other applications that were methane abatement. You know, there's a ton of interesting applications, but when you look at like how the mining industry is going to segment over the next 10 years, like there's definitely going to be institutional utility scale fleets that are really more focused on the power side, and we'll have, obviously they'll be having uptime, but I mean, you're going to have sites where they get built to run at 25% uptime.
Where are you guys, if you don't mind us asking, where are you guys coming up with your capital? Like what's your backing for these infrastructure projects?
So this is a good question. This is where I probably keep a little bit more private, because a lot of our capital stays a little bit more private.
Yeah.
I think in general, the mining community is very inefficient in the way they deploy capital. We have a wide variety of partners we use. We also, it's a little bit like a traditional development play. Like you can get banks to underwrite things.
That's the difference.
Like,
yeah, because you guys have actual, you have collateral. You
have a building or infrastructure that has
transformers
that you can, you have, and you can underwrite a business model, right? And you can get capital that way. That's not all of it, but I mean, it's also kind of more about building those traditional capital stacks, right? I feel like a lot of miners just kind of go, okay, I want to raise the money with either equity or debt, and I want to own the whole thing. And then you end up like, that is a lot to eat.
Yeah, it is.
It is just a lot to eat. And so when you do that, it reduces the speed you can move, because your capital is all tied up in one place. It increases your business risk. And it's really hard to go convince a bunch of people to give you funds to trust me. Yeah. Trust me, bro.
It's going to work, man.
I'll go build it. And like we run into that a lot.
It'll be different this time, I promise.
It'll be different this time.
And I mean, we've got, decades and decades of real estate development, large capital projects, and energy knowledge on our team. Like we've done a lot. That helps. I mean, you can get, and we try and stay in our lane. We don't go try and say, hey, let's make a big ASIC play.
Right.
We're like, we want to go put metal and concrete in the ground.
Yeah, it's what they understand.
Yeah,
it's same with oil and gas companies. You got to talk their language,
space work.
Right?
And there's learning. It's a ramp up there. Certainly, we learn a tremendous amount from every project we do. Where this space is evolving very quickly. Yeah, you're still figuring out structures. Investors are still figuring out structures. Like rates of returns are all over the place that people demand. But it has been interesting because we've been able to, just using some different paths than most of the community does. We've been able to maintain pretty strong capital access.
That's good
as we've begun to grow.
That's good being on that the infrastructure side. It's capital's easier. I'm not,
it's just easier, right? And so it's not like a magic trick or anything. Yeah. I don't have like I don't have like three mystical billionaires that are like, Joe Millionaire.
Joe Millionaire. We can give him some of our billions.
Right. It's more like, we spend a lot of time meeting with like development banks and big banks and small commercial banks and financing partners and insurers. And, that is part of what we do. And that's where we think we bring a lot of value. Where, building this internally as a Bitcoin miner is a lot of resources, a lot of time, and skill sets that are very different than the rest of your team. And so we feel that we are a great partner in that case for miners looking to deploy infrastructure.
What did you think of the Northern Data? You see, they bought that
Saxit site,
Saxit site, right?
It's a large front of the meter site.
Yeah.
I think that I think energy management strategy is going to be critical to deployment. I think it's in a good location.
Yeah.
It's in, that ERCOT South area.
It's not as oversaturated.
Yeah, the West. And South is interesting because the wind has a totally different profile than ERCOT West, and so you just think about how you want to trade your position there differently, right? Because you're essentially long volatility on the grid, which is rare and almost non-existent on the side. And so when you are thinking about, okay, I now have this giant whack of long vol demand sitting in ERCOT South, how do you want to play that? But I think it's an interesting side. I think you're going to see that may be like the end of the distressed site sales, so to speak. And I know that one had kind of been, that had been distressed, and then Saxit had been working. And I don't know the whole story, but I know those guys have been working on developing it, and then they, exited out to the Northern Data guys, which are, I've heard, good things about all those teams. I know everybody's been working that deal. But we weren't really super close to that, so I don't have a lot of like inside baseball.
Yeah.
But
is that though something that you would see? Like, would you guys package up a site like that? And
yeah, we have the ability to do that.
Yeah.
I think we would probably part it out a little bit to make it. We just find it easier to get. I think in the market right now, you're seeing. You do still have some demand for those 100 megawatt sites plus, but like when you get into talking to them, like, 100 megawatt site, you need like $250 million in ASICs.
Right. Man, what I've seen lately more is it's a shit ton of money.
It's a fantastical amount.
Yeah, of capital. And it's like, and then if you don't do it all at once, like you've got all that other sunk capital into that site just sitting there. And I think
that's where like we got our first on this North Dakota site. Like we got our first, call it 30 megawatts online in about 75 days, which is like we're proud of. We feel that's pretty fast. Really that's certainly like there's definitely groups that have built faster, but we'll have the first full couple phases of call it 230 or so megawatts. Will be up and hashing in the next by middle next year. Yeah. And so when you start talking about that, I think that's something we feel our model unlocks is because on a lot of these, to the capital and the sizing. It's not desire or the actual construction speed that slows people down. It's literally getting the financing, getting it built, getting that
much money.
Why does everybody go so big? Is it a big dick measuring contest? And you think that if you're the biggest, then all of a sudden the capital is going to flow to you, and you can just keep snowballing it into something like bigger.
Flex.
Conversely, it is more difficult to get super cute on the power side the bigger the side is.
So there's no economies of scale. It's actually harder.
You can get economies of scale on some pieces.
Yeah,
I think certainly having standardized designs is something the industry is slowly choking itself towards. Way far from.
Oh man, it's so different.
If you're looking at it as a power opportunity, you're like, how do you, if you want to really get aggressive in ERCOT on like how you're going to deploy a thoughtful strategy, you probably would rather have 5 20 megawatt sites than 125.
I agree because a lot of it has to do with like nodals too, right? And
I think some of the stuff that is being talked about now, where there's some open conversations with ERCOT and the legislature around letting other, and I'm not the expert on this. There's a bunch of guys in the space in Texas that are way more up on this, but essentially letting other loads take nodal pricing, so you don't have to be batteries or a cogeneration facility. That would be a big unlock. But right now, the only way to really get that nodal pricing is if you have a direct PPA with a generator and it's priced at that nodal reference price.
Okay. Well, I feel like if I'm going to buy a site right now and I don't have the money to build out all 100 megawatts, I don't want a 100 megawatt site. Like I want.
It's also, 15. Are you a real estate company, an infrastructure company, or like a mining company? I think these are different things, and we don't talk as much about it. It's like, shouldn't miners be like lease first.
Yeah.
Where you're gonna have to put it. It's a unique building, right?
Right.
It's you don't see, like when all of the big drugstores expanded, right? Like Walgreens was putting up a ton of capital to build those drugstores to spec. CVS was putting up a ton of capital to do that. But they don't own the land. They don't own the building.
Yeah, right.
But they put that capital in to build the custom sites so they can make money on it. And so I think you need to understand if you're going to have a heavy real estate or infrastructure position, or if you just know that like that's part of your stack, is you're going to have to pay some build out to get it in, but then you don't have the burden of that real estate long term. Now there are, family offices, kind of private capital that wants that real estate.
Yeah. Right.
And so it's just.
Are there many people in the space currently that are essentially acting as landlords?
I think there's more coming up now, but I think it's more. I don't think it's like an organized type of like organized groups that are doing that. I think people are realizing I can make money by acting as a landlord with a power generation facility nearby, and.
I mean, I like to think we're a little bit more intentional about it, but yeah, I would agree that it's still
you guys are. You guys
it's still
are.
pretty early.
But like, there's not a ton of those.
Yeah,
there's not a ton of those. Like,
it's not sexy.
Yeah, right.
It's not a sexy business. It's dirty. Stuff breaks.
It's blue collar.
You got to fix it. Everyone yells at you all the time. Like you just get yelled at all day.
Yeah.
Like everybody yells at you.
Yeah, I can see that.
Yeah.
So
like,
are
tenants yell at you? Power plant yells. Everybody yells at you.
Are you guys basically you're building it out? And like your North Dakota site.
Yeah.
Right? Okay. So you got the North Dakota site, and you're basically going to have a bunch of different tenants out there. But do you have one uniform kind of deal you're doing with them, or is it like we work with you depending on kind of what your need is, and we'll provide some different level of service here versus there, even though it's your same facility?
We're very build to suit. I think we've learned through the process on this site. Some of the structures we prefer more, or how we define them. But I mean, we'll see everything there from, I'm going to throw a line over the fence and you're going to build, you're going to have to approve, I'm going to have to approve the designs and the electrical and make sure that it's safe.
Yeah.
But you have full development control, and you want to, you're like, oh, I can build it cheaper than you, Joe. I want to go build it.
You let them do that?
Great.
Okay.
Have a great, go for it.
Yeah.
And then there's also groups that want it all built for them and to potentially, finance that cost out. There's other groups that'll pay up front to get it built out because they want a lower lease rate over time to improve their power economics. There's groups that'll sign, basically a building lease where we'll deliver them a powered shell, and then they're going to bring the operations in. So all those structures are on the table with us because there is a lot of texture in what people want. I think we'll see a couple of those kind of become more dominant through this next growth cycle. Yeah. But certainly as you get people into the space that just want the ASIC exposure and know they don't want the real estate exposure or the infrastructure exposure, you're going to see, I think, that shift.
I got one for you. We need to talk about after the show, but
after the red light goes off.
Yeah. What do you think because I do feel like, we're fixing the halving's coming up, and just because it happened in the past doesn't mean it's going to happen in the future. But if Bitcoin reacts the way it has in the past and we go into another bull run, what do you think this one's going to look like from an institutional level as opposed to the last one? Do you feel like they're based on, because you do talk to a lot of financial services or financial groups that are more traditional, like, are they looking at it a little bit differently? Because even though you are doing infrastructure, they still probably want to know who's your end consumer, right?
Sure.
And so do you feel like there's been a shift in them at all? Or like, how much have they been educated over the past 2-3 years?
So it's definitely more known.
Yeah.
I think it will be a strong data point to see what the market does through the halving and which types of facilities perform well. I think this assumption that hash rate is going to drop 30%.
I don't think it is.
I don't see it. I think we saw that happen with as we kind of had that double top, and then you just kind of saw that minor capitulation. Like, we were, 12, 18 months ago, all the S9s like got flushed out of the market. We just saw it happen. Like, that was, you were almost able to see for 4 or 5 months, like, everyone was like, where's all this power coming from? And it was a lot of just high grading the fleets.
Yeah.
You know, you were just seeing more stuff put in. I think the ETF adds a tailwind. And, you know, if you consider most of the fleet globally now is probably S19 bases or better.
Right.
I think those are very survivable through the having with the right power strategy.
I did see S9s got profitable again, like
they're like,
2 weeks ago.
I think there's a lot of value in S9s long term. I mean, not a lot of
from
value.
a different
Give me
standpoint.
some warehouses full of them for $1, but I've got some ideas on how you can. At that point, they're basically just a load bank.
Right, that's what I was
you can
saying.
run.
You can use them.
You can use it for other things.
Right.
But I think, but again, when you look at the amount of hash and like the amount of terahash that's out there that would drop off, the base is much bigger, and a lot of the older stuff is already gone.
Yeah.
And so I don't know that you're going to see that capitulation. Now, you may see some intermediate stuff where people are just shutting off, waiting for like where their economics go under. And you're certainly going to see, we still find a lot of these like small towns we'll go to, they'll have one guy that's set up a couple megawatts 5 or 6 years ago that's still ticking away, but if they're a little bit loud and so the neighbors don't like them, so they're like, are you going to do buildings? Or, you know, like you still see those facilities. I think you may see some of those become more difficult, the economics. That being said, 100 of those is like one riot site, right? Or one Rockdale or one Helios, you know.
Yeah.
And they're pretty resourceful. I mean, those there is definitely a wave of American miners that have grown through a couple cycles now that are reasonably well capitalized. They're very savvy. They carry very low debt, and they're kind of growing now into that 5 and 10 megawatt sizing.
Yeah.
And so I don't think I think you're going to have, it's doubling hash rate again is so hard.
Yeah.
Like I don't think people understand how much power we have to put in the ground to double the amount of hash rate. I mean, efficiency gains help, right? New machines help. Like you get an incremental, but we're not. What were S9s again? Like 18 terahash or something?
Yeah, 13, 14.
13, 14 terahash.
Yeah.
We're not going up to like we're not doing 1,000 terahash.
No,
we don't have petahash
we're
miners
not even close to
on
that.
the same power consumption, right? So you're not going to get a 10x in your efficiency
again,
in your power efficiency, and everybody's focused more on a, you know, the efficiency race is going, you know, 20 watts per terahash, 19, 18. It's not going from 60 to 30.
Right.
Yeah. It's just a different.
It's like the cell phone growth chart, right?
Yeah.
Like you had this explosion on what smartphone, and then they start tailing off on like what they actually do better.
And so I think you end up with that. I think that helps put a floor on hash price.
Yeah.
And I think because you're going to need to start, when we talk about some of these other markets, like the PJMs that have pockets, well, as hash price rises, it's almost like the tide rising as far as turning sites green, as far as being able to deploy there.
Right.
But it's not like there's a bunch of 100 megawatt sites sitting around with bad power pricing that are just waiting to get.
No, not at all.
So I think I mean, I wouldn't be in the space if I wasn't bullish on Bitcoin. But I don't see I just don't see where you're going to put a lot of these sites out of business, right? Like when the miners when you had a bunch of turnover in sites, none of the sites stopped hashing.
Right.
The LLCs changed names, but nobody turned them off.
Yeah, right.
Like this stuff's pretty durable, because it takes a long time to build and it's hard to find. And so and if you think you're going to see that, I know I talked to a couple people that came back from the Hong Kong one that Bitmain does, whatever, a couple months ago. WMNS, I can't remember the acronym.
Whatever
a bunch of them were all bulled up on Qatar. Qatar is 4 gigs.
Yeah.
Their whole power grid is 4 gigs.
Yeah.
That's 2 large power plants in America.
Yeah.
Like there's just the size is not size, right?
Yeah,
and so when you're talking about where is this growth going to come from, I think it's going to come from large scale large scale co-located deployments, and those take time to put together, and they take a little bit of time to build. And once they're in, they're not turning off.
Right. Yeah.
But very bullish on the institutional side. I think that's a lot of the price action we've seen is them starting to get in and get comfortable.
You're right. I think so too. I do think so.
Do you have any price predictions for Bitcoin by June?
This is always such a side.
I know.
What a side.
Just do we have a good soundbite or not?
This is going to be the lead in on the show.
Yeah.
Right? Joe says Joe Millionaire says $1 million Bitcoin.
$1 billion.
I think we'll see some positive price action, but I think if anything, it'll be a lot like the last few halvings where you're going to have a delay. You don't have it. It's not like this immediate price shock. Like if oil lost half of its production in a day,
that's a problem.
Oil price would just
go to. I mean, it would be $10,000.
Right. Bitcoin it doesn't work the same way because we don't utilize it the same. You know what I mean?
It has less
direct impact.
It's not being used as much as for like global collateral payments yet because it's still so early.
Right.
It would be like production dropping in half when we were still scooping it out in buckets in Pennsylvania.
Yeah. Right. Yeah. If
you did, it'd take a while for everybody to notice.
Yeah.
Because there's not that many people use, the oil shipment's late this week. Well, I guess I'll use the candles.
Right. Yeah.
I do think you'll see. I think we'll be higher than today in June. I think hash price will probably be
higher than today. Too.
I don't. At some point, you kind of got to realize, BlackRock's not doing this to sell $40,000 Bitcoin to their portfolio members. They're doing it to sell $250,000 Bitcoin to their portfolio members.
Right. Yeah. There's a reason,
right? Like they're gonna, it doesn't take a big string of effects to have this is our platinum premier ETF share. Each share is a 1/10 of a Bitcoin, but you got to pay 25 grand a share for these guys.
Right.
The unit bias goes both ways.
Yeah.
And so I think, where are you at, Jake? Where do you think?
I have no clue, dude. You're Joe Millionaire.
No, yeah.
I think hash price will be lower than it is today.
I'm curious if it'll.
I don't know. That would be an interesting one.
That's the one that matters a lot to the miners, right? But that's the one that, because I do think the hash rate is just going to keep growing. So I don't.
Where's it coming from?
I don't know. These S21s. Will the S21s be out yet?
I think this last big growth we saw the last quarter was a lot of the stuff that was put in the last bull run that was finally getting energized.
Yeah. That's very, very possible because most of the S9s did come off, and so you were filling those gaps with newer machines now.
Yeah, I mean, if you want to raise hash rate 10%, hash rate 10%, you're gonna need what? 5 Helioses or Rockdales?
Yeah.
What are those? I mean, if there were 5 of those being built right now, we'd know them.
True. Good point. That's why he's Joe Millionaire.
Do you think there's any super secret shit going on?
It's pretty hard to build a site that big.
Yeah, that big would be tough. Everybody would know. Everybody would know.
It's not a big space. I mean, it's just not.
The Saxit one, everybody kind of knew that was coming on at some point. Your guys' North Dakota stuff, I've known about that for a while.
Yeah, but that's 2.
Yeah, that's 2.
Where's the other 3?
I mean,
I'll leave 3 more. That's 10%.
There's not a ton more. Yeah,
200 megs is what, 10 exahash,
right?
20 exahash.
Right. It's not enough to move
We're
them.
At 400.
Right. Yeah, that's true. I mean, and that stuff's going to take a while to get on.
Yeah.
Even the Northern Data stuff down there with Saxon is still going to take a while to get on. But
yeah.
Are you guys doing anything international? Because I might have something for you, man. I got a meeting today.
I'll look at anything.
Mm-hmm.
I think that capital's harder.
Yeah.
Rule of law is a real thing, especially if you're trying to finance things.
Yeah.
Import exports. I mean, I lived as an expat for 10 years.
Where at?
Singapore, Australia, and Brazil.
Dude, this is most interesting guy in the world. Kind of deal over here. That's awesome. I did not know that.
Yeah. Yeah, that's where I was building oil rigs.
Really?
Yeah. We would go to the hardest spot you can find and build the most complicated thing you can find and have it run by the lowest denomination of education.
I was going to say the least educated person you can find.
Exactly. build $1 billion piece of equipment and have 0 college degrees on board.
Right.
And have it go operate in the middle of the ocean and dynamically positioned within 1 meter.
Which is crazy that those can get financed, right? Because it's like, we're going to have a bunch of people who can't read operate this facility.
But and the thing to remember too is like even a lot of those, if you look at like the drilling rigs, lots of turnover on those companies. You really have a couple big ones that stick. I mean, obviously Transocean at the top, the couple that stick around, and a lot of their rigs, they self-finance the construction on a lot of them, or they're like, they'll do. I mean, they have access to capital markets, they can have more tools.
Yeah.
But it's hard to think.
Yeah. Really.
Well, yeah. It works almost exactly like a hash price forward would be for a mine. You know, like if they're signing a 2 to 3 year contract on a 20-year asset. They know what the rate they're going to get the next 2 or 3 years. Yeah. And then you don't know what you're going to get. It's like,
maybe.
Could be $100,000 a day. Could be $700,000.
Yeah.
I don't know. Yeah. So it's some interesting corollaries. I think that's partly why we see a lot of oil and gas in the mining space is because you just think about risk a little bit differently if that's kind of the market you grew up in. And there's a lot of parallels.
Yeah, right. There is a lot of parallels. I mean, obviously, we talked about that a lot too. It's just, I mean, even you talking about like after the halving, if you take, using the example in Pennsylvania, we're taking half the oil out a day. Like, that is how early we are in this space, though. That's where we're at. So it's interesting, but. Yeah. Do you have to, when you're talking to the money guys, are you talking much about Bitcoin economics? Like, do you have to explain it to them? I'm always explaining it to people.
Oh, really?
Like,
they're just space heaters that run accounting software.
So you're not having to walk through the economics of it? Yeah, that's awesome.
They're space heaters that run accounting software.
Yeah.
And we rent out slots.
Man, I'm going to start trying to describe it that way.
Think about it. I mean, we get paid by the minute. There's space heaters that run accounting software.
Man.
QuickBooks by the minute.
Yeah.
Keep it simple. I'm
going to try that. Because they get on to getting nitty gritty, like down dirty. Hash price, how's that impact? I don't understand this. Well, Bitcoin's this much. It doesn't make any sense for it to be that much. And like, I don't know, decline curve, man. It's a decline curve. Just look at it that way.
That's not a bad way to look at it. But I think it's really, and honestly, like the knowledge, like it keeps rippling out, right? Like education is improving year after, and that's why we spend so much time at all the energy conferences is educating. It starts with the smile you get when you say, hey, it's a space heater that runs accounting software, because they know that's not the whole story, but it gets them interested, and they can put that in their mental framework and say, and it's even easier now where you're seeing some of these startups coming out that are literal space heaters. Right.
Yeah, no kidding. That's true. Are you coming in power?
Yeah.
Okay, good.
We'll be there.
Yeah.
We'll be there. We've been getting our conference schedule lined up for next year. Excited to come and engage there. It's one of my favorite conferences in the space because they do such a good job. You guys do such a good job blending the power and the Bitcoin piece. Yeah. And there's oil there as well, and the gas guys. But it really blends energy and Bitcoin really well. I don't think that's tough to do.
That is. You guys do.
It's gonna be different this year.
Yeah.
It's gonna be very different. Once we hit the light off, I'll clue you guys
secrets.
in. Secret sauce. It's gonna be different this year in the best kind of way. It's gonna be unlike any other event you've ever been to.
Well, we're excited.
I want to get down to the nitty gritty.
Yeah, you need to be talking at it, man.
I'd be happy to.
Yeah, we'll make it happen.
I'd love to have a
conversation. You're on the list.
Perfect.
Yeah, dog. So, well, bro, thank you for coming and blessing us with your very detailed knowledge. I don't think there's anybody on the power side of it that I think knows it better than you. So,
well, I appreciate that. I think there's certainly a lot of power people I know that are a lot better at this than I am. So,
well, when you combine the power and infrastructure side, I don't know. I really haven't met them. So,
well, appreciate that.
I always enjoy listening to you, and you're funny, and you got some dope suits too, man. I gotta. He keeps me on my toes, man. I gotta step my suit game up. Another one.
Man, I need to bring a powder blue one.
He had this powder blue suit in Miami. I was like,
ooh,
man,
bring that bad boy out.
Yeah, we can pick that sucker up in Cartagena.
And then you can wear a bright orange one.
We can be like the Bitcoin Dumb and Dumber. I like it.
Done.
I like it. We should do it.
That means we got to be on stage together.
Yeah, we do. We need to. I'll interview him.
Let's do it.
Yeah.
Awesome.
I like it. Joe, thank you for coming.
Hey, thank you for having
Adakon
me.
Energy, good group. I'm trying to get some deals with them too, so we'll talk about that after the light goes off as well.
Excited to work with people.
Oh.
Love being here and love being in the space.
Well, thank you for coming. Appreciate it. And
catch you guys in the next one.
That's it.